Hello traders, welcome back. In this video, I will teach you a strategy that is going to help you pass FTMO or any prop from challenge. I do not want to waste your time. Let's get on straight with the video. The very first rule is, identify higher time frame order flow bracket trend. The very first rule is, you want to identify higher time frame order flow. Once you do that, what you want to do is mark out OB or order blocks near price action. So let's assume that if the order flow is bullish, you would mark out every order block below the price action. And if you are bearish, you would mark out the order block, every order block above the price action. Wait for price to mitigate your OB. So the higher time frame must be 4-hour time frame. You cannot just be using any other time frame. Just follow and use the time frame that I'm going to teach you in this video or tell you in this video. Our higher time frame is going to be 4-hour. For confirmation, I'm going to use the 15-minute time frame. Wait for price to mitigate your OB. When price mitigates your OB on a 4-hour time frame, you want to drop down to 15 minutes. So drop down to 15 minutes time frame. Once you do that, you want to look for market structure shift during kill zone hours. This is very, very important, guys. You must look for market structure shift during kill zone hours. Let's say you get a market structure shift. Take your entry from the order block, from the new 15 minutes OB during on hours. That as well. And go for 1 to 2 risk to reward every single time. Here are the rules. You must identify a high time frame order flow, mark out order block in your price section, wait for price to mitigate your order block, and you can see all these rules. This would look something like this. Let's assume that on the 4-hour time frame, we are bullish. Something like that. This is what price section is going to look like in the real market. What you can do is you can mark out every single order block near this leg or below here as well. It doesn't really matter. But for now, you mark out these order blocks. What is an order block? Let's say that this is a bullish leg. That would be a bearish candle, bearish candle, bearish candle right here. Or you could simply call them demand zones. So you wait for price to come back into your order block. And once that happens, so what is an order block essentially is you have this bearish candle and you have the wick, and you also have the wick. So the body of the candle is your order block, not the wick. Okay? Do not trust anyone. Just follow this step. The body of the candle is your order block, not the wick. So let me delete this and this and this. So let's assume that price comes back into your POI, which is the order block for our order block. You drop down to 15 minutes time frame and the price action is going to have. So the price action is going to have, it's going to look something like this. You wait for market structure shift. That happens. It should happen during kill zone hours. The kill zone hours 2 a.m., 6 a.m. and 7 a.m., 11:30 a.m., New York time. You must look for displacement during these times. And once you get the displacement, and mark your structure shift. So once you get the mark your structure shift, you want to mark out the order block. So what is an order block? It could be consecutive bearish candles. So let's say this is how you got market structure shift. So you have a lower low, lower high, and lower low. So this lower low had bearish, consecutive bearish candles. Now, that would be your order block. But let's assume that you had bearish candles, bullish candle, bearish candle right here. Then that would be your order block right there. You mark out the body of the order block and you look for your entry during kill zone hours and you go for 1 to 2, put your stop right below this flow. It's really that simple, guys. So let me give you guys a couple of examples and then I'll end the video. Alright guys, I'm on EURCAD and I'm looking at 4-hour time frame, which is our higher time frame. So if I go back, you can see that we have been bullish. The order flow is bullish. We are only going to take long positions. I am going to mark out every single order block around here. This candle right here is an order block. This candle right here is an order block. This candle was an order block, but it was not respected here. Let me show you some other examples of order blocks. So this one was an order block right here. And this one was an order block here as well. This right here, but it didn't get respected. So anyways, what we do now is we have two order blocks marked out. So this one and this one. So let's go back to 15-minute time frame and look for a shift in market structure. It did not happen here on this order block. So this is the second order block right here. Now, as you can see, we do have something here, but it is not during kill zone hours. We're going to skip ahead. Now right here, you can see we have lower low, lower high, lower low. And on the internal market structure, we have lower low, lower high, and lower low. This is the wick. One thing we must confirm here is the price action within the order block. So this is the order block right here. If price violates the order block and then gives you a market structure shift, then that trade is invalid. That setup is invalid. However, if you get I'm going to mark a structure shift within the order block on 15 minutes time frame, remember, we are looking at 15 minutes time frame, and that happens right here. When that happens, I want to mark out so this is the order block, last bearish candle before move to the upside or consecutive bearish candles. So if there was no bullish candle here and all I had was these bearish candles, and then I had a break of this structure right here, then I would take my entry from this level. I do not care about the stop loss. I don't care how big it is. I'm going to go for 1 to 2, and it is going to hit my take profit most of the times. But in this case, as you can see, we had this last candle, and that is the only bearish candle we have here. So that would be our order block. We did get our market structure shift at 3 a.m. New York time. That is a plus point. So we simply take our entry from this order block, put our stop loss right below this order block, and we go for 1 to 2 o'clock, simply. And when price reaches 1 to 1 o'clock, risk to reward, we go break even. Or if it breaks a significant high, which is right here, we go break even. Let's see how this plays out. We get our entry. If I play this through, you can see we hit our take profit with momentum. So essentially, price took out this high right here, and the take profit was hit. The stop loss was 8.2 pips, and our take profit was 15.6 pips, and that take profit was hit within like 30 minutes. That's it. End this video, but before listen this. And one very important thing, when you use this indicator on 5 minutes or 15-minute time frame, then your stop loss will be very small. So it may be that the broker you use, they provide you very high spread, due to which your chances of hitting the stop loss will be high. So I would request you to use Exness Broker, which will provide you zero spread account, and you will be able to execute pinpoint trades in the market. Link in the description. Join now. I hope you must have liked this trading strategy. If you get to learn something new on our channel, then do subscribe to our YouTube channel. Happy trading! Thanks for watching the video.